Gold just printed a massive bearish candle at 4,400, a move that could mark the turning point everyone's been waiting for. But here's the truth. Most traders miss gold's biggest moves because they don't truly understand what's driving this market right now. In this breakdown, I'll show you how institutions are quietly positioning, the three forces shaping gold's next move, and my exact trading roadmap for the week. What happens next could redefine gold's path to 5,000 or trigger a deep correction few are prepared for. So if you're serious about trading gold, stay with me till the end. Let's break down the three macro forces driving gold right now. Macro outlook, three key forces driving gold. Force number 1, geopolitical and fiscal risks. The US faces a possible government shutdown. Pressure is mounting on the dollar, while gold quietly strengthens as a safe haven. Tensions between the US and Venezuela are escalating as Washington deploys F-35 fighter jets and two B-1 strategic bombers near Venezuelan airspace. In response, Caracas has activated its Buck-2E air defense systems, reportedly ready to engage any US aircraft, under the pretext of targeting drug trafficking groups. Russia-Ukraine peace talks show some progress, but no deal yet. Until a concrete agreement is reached, uncertainty will keep gold supported as a safe haven. That's just the first force, but the second one is even bigger, the US dollar. Force number 2, the US dollar dynamics. The dollar remains the most important counterforce to gold. Let's follow its story step by step. DXY technical analysis. On the daily frameway, the US dollar index, DXY, continues to consolidate sideways. For 6 consecutive sessions, price has remained trapped inside a descending triangle, repeatedly failing to break above the 99 resistance. The index is likely to continue consolidating in the near term. If DXY cannot break above 99, it may pull back toward 97.7 or even 97 to seek new bullish momentum. Even if DXY breaks 99, it still faces a major resistance zone at 99.8 to 100, which is expected to cap any strong upside move in the short term. Here's the catch. DXY's next move won't just impact gold, it could rewrite the short-term trading landscape entirely. Now let's look behind the charts, at the institutional flows shaping gold's next move. Finally, institutional activity. While retail traders are still debating whether gold has already peaked, institutional players tell a different story. After accumulating 40 tons of gold 2 weeks ago, Gold Trust has recently trimmed its holdings by 20 tons, reducing total reserves from 1,058 tons to 1,038 tons as part of a risk management strategy. The fund appears to be waiting for a more favorable opportunity to reaccumulate positions and drive gold prices higher once again. When capital of this magnitude shifts, it's not noise, it's a message. Retail traders often get trapped chasing moves too late, and that's when the real game in gold begins. These actions suggest the fund may still be aiming to drive gold toward 4,300 to 4,400 and eventually 4,700 to 5,000 before taking profits, positioning itself to hedge against a possible Ukraine peace deal and a potential US dollar rebound. So let's zoom in and see what the gold chart is really showing. Gold technical analysis. First, congratulations to those who followed my September 4, 2025 analysis and bought around 35.12 when the price retested the 3,500 support. You're now sitting on a gain of more than 5,000 pips. That's why it's crucial to subscribe to the channel or join our Telegram to get real-time updates so you don't miss the next major wave in gold. Now let's break down the gold chart. Daily, H4, H1. Step by step, here's what the market is really showing. Starting with the daily time frame. On the daily chart, gold remains in a corrective downtrend. Following a sharp drop from the 4,400 peak, the US-China trade agreement triggered profit-taking as investors reduced safe haven exposure, sending gold lower. Yesterday's D1 candle formed a mild lower wick near 3,900, a failed break, a signal that buying demand is emerging at this level. We expect gold to hold above 3,900 in the coming sessions and potentially rebound higher. If H4D1 closes above 4,000, gold could extend its rally toward 4,100, 4,150, and 4,200. A decisive break above 4,200 would open the door for a retest of the 4,300 to 4,400 highs. If 3,900 support fails, The next downside target is around 3,800, where a strong rebound is likely since this level aligns with the 0.5 Fibonacci retracement. The probability of a deeper decline remains low, unless triggered by an unexpected macro event. Shifting down to H4 chart. The H4 RSI has started flashing buy signals, confirming that bearish momentum is weakening and buyers are beginning to take control. We expect continued recovery over the next few sessions, so let's zoom in to the H1 chart where things get even more interesting. On the H1 timeframe, gold has already bounced 700 pips from the 3,900 support zone. Price continues to retest and reject this level, suggesting a potential double bottom formation and an upcoming bullish reversal. If gold closes above 3,970, it could continue rising toward 4,000 and beyond. As we highlighted earlier in our free Telegram group, this aligns with our Wave 2 scenario, a retest of the 3,900 low followed by a strong upward move which is now playing out as anticipated. This structure gives traders a clear multi-time frame view. The market is in a corrective phase, so risk management remains essential. All of this brings us to the key takeaway: why consider buying and sell gold now? Gold remains in a strong bullish cycle, supported by institutional demand and technical setups. However, the DXY rebound is a key headwind to watch. Let's turn that analysis into a practical plan, the exact playbook I'll be following this week. Trading plan. From October 27th to November 28th, 2025. First buy zone 3,800-3,825. Institutional support, round number, probability approximately 90%. Stop loss 37.99. Targets 38.47-38.97 short, 39.47-39.97 mid, 41.47-43.77 long. Second buy zone 38.80 to 39.15. H4 support, round number plus fail break approximately 90%. Stop loss 38.87. Targets 39.47, 39.97 short, 40.47, 40.97 mid, 41.47, 43.77 long. Third buy zone 39.30 to 39.53. Nearest support, probability approximately 85%. Stop loss 39.29. Targets 39.77, 39.97 short, 40.47, 40.97 mid, 41.47, 41.97 long. First sell zone 41.40 to 41.50. H4 strong resistance, probability approximately 85%. Stop loss 41.51. Targets 41.31, 41.03 short, 40.53, 40.03 mid, 49.53, 49.13 long. Second sell zone 41.80 to 4200. Neckline resistance of the double top pattern, probability approximately 90%. Stop loss 42.01. Targets 41.51, 41.03 short, 40.53, 40.03 mid, 49.53, 49.13 long. Third sell zone 43.77, 4400. All-time high, probability approximately 99%. Stop loss 44.01. Targets 43.53, 43.03 short, 42.53, 42.03 mid, 40.53, 40.03 long. Pro tip: false breakout? Wait for the retest, re-enter for clean profits. Remember, probabilities don't guarantee outcomes, but they keep us disciplined. Gold doesn't move randomly, it reacts to real global shifts. This move hasn't even started yet, and this is your chance to be early. Don't follow the crowd. Trade with clarity, not emotion. Subscribe to Gold Mastery and join our Telegram to catch the next major move before it begins. Master Gold, master the market, trade smart. This is not financial advice.